Okay, so the first thing is let's think about how I came up with all of this, right? That's the first thing. 388.25. If it don't reject, right, and if it don't reject here, this will be my first bullish alert. Does it mean that I'm full bull? No, not really, right? So I know it's hard for you guys to see this. I'm gonna clear this out. Hopefully, everybody got a piece of that, and I'm gonna clear that out. Right, clear this out. All right. So my targets right now are the most likely target represented by the candle, bullish and bearish. So let's draw this out. This candle, right? We know is most likely a down, right? I mean, you can't make this up, right? This is the last time it happened like this, right? The sandwich, right?
Uh,
Look at this. This is another one right here. Can this week be bullish? It probably could. I wouldn't be surprised. People are really observing this right here. Like, okay, is it a big drop or is it a small drop? Now let's identify how this candle comes up. This candles mean what? It gapped down on Monday, maybe midweek pump, and then sold off, right? And it's still bearish. This candle means that it started Monday, maybe one green day within the week, and then it still ended, and Thursday and Thursday combination of Thursday and Friday was bearish. This week we had the market needs kind of like a sort of a bounce. Now this is the most imperative thing that we have to understand. We have it like if you took profit on everything I called like as a day trade, you're fine. Now if you hedge, if you hedge and you're hedging calls, early week we're gonna have to rinse out the calls if that makes any sense. Now, end of the week, I'm suspecting weakness. Now, this CPI data that's coming up on Tuesday. Who remember the last two CPI data besides bro Don Cheeto? How it happened? You guys remember? The last one was pretty ugly. It pumped up, it just straight fade off, and it sold off, and it just kind of recovered a little bit like midday. Remember? And one of them it pumped up like maybe like 3-4%. At open, it's just straight sold off. You guys remember? So I usually when people are optimistic into the CPI, what happens? It dumps, right? Let's think about this. It dumps. Now, going into this data right now, are people what is the sentiment out there right now? Bearish, right? Uh-oh. Uh-oh, right. Job numbers is still good. Job numbers is still good, but um, everything's starting to fall apart out of nowhere. And then Paul's probably getting ridiculed a lot. He probably doesn't care. Um, he probably doesn't care really. He's just acting. He's just like, I'm doing whatever I have. So now let's talk about the possibility candles. It can pull up to about 394, like halfway mark. And I want you guys. This is watch the 394.70 area. Anything over here, you got to be bullish back to this line right here. There's no if and a but. So this is my second bullish alert number. This is just kind of like, could it be bullish? Could I day trade from here to here? A spy, a spy calls or any calls, right? Now, and then it can probably drag down by the end of the week, matching around where about 382-ish. Remember, we established that it's going to go below 382, right? We established it's going to go lower, and I'm going to tell you guys how I came up with that. Now, one key thing I want you guys to observe is this: isn't the seven crossover, right? Let's look at the last period. Did the seven cross over here? No, not yet. It crossed over now. You guys see that? Let's look at this. I want you guys to pay attention to these two numbers. And I told you guys this is like the confirmation of the trend change, right? And then this one, right? I'm gonna underline it. I'm gonna show you guys what I'm talking about, right? The EMAs, right? So the first one is what was it? What did the five cross over on the green hammer? The answer is no, right? The five didn't cross over on the green hammer. And then to the five crossover now, yes, right? So we know that is the chances of it making a lower low is high. So don't freak out on puts, guys. This is what I'm trying to. Yeah, last week I don't mind sharing. I closed out like something for a loss, and I was thinking about it. Man, why did I even close that out for a loss? I was looking at like my journal, and a close person in the group. You know how sometimes you respect somebody's trading, and And this is one of the reasons why I felt like I had to leave TradeWorks. Like, I can't. People throw me their analysis thinking like they know what, you know what I mean. And my style is just completely different. I like just to kind of be prepared what to expect the next period. That's it. Now, if we get this, expect another sideways sort of. If we get this right here, right? If we get this. Now, one key thing is Monday and Tuesday. Monday and Tuesday will be the exit day for calls. If you're in any calls and you're stubborn, you're still holding, that's the exit day. Now, I know that and I'll show you guys how I came up with this. So, what's another possibility of this candle from here? A bullish engulfing. Anybody think that we're getting a bullish engulfing this week? Anybody? You think that we're getting a bullish engulfing this week? I can tell you that we're most likely going to bounce Monday. We had like right, we have like calls floating in, right, and the market needs just a little pop up reset. Don't get milk in into this FOMO buying. Makes sense. Keep everything like calls wise to a day trade. If you're gonna swing puts, make sure that we got covered the whole week. Makes sense. At least a Friday. Now I might buy puts at. Honestly, I might buy puts. I might buy puts after the CPI. I don't know
Okay.
why. I'm hoping the CPI pops up and then faded the rest of the week. So as long as the CPI doesn't take this over 394.70, I would like to see like 393, 394 get rejected, and then we probably take a lot of 382, 383 puts or 380 puts for the following week. A lotto play from 394. Anybody have any questions? Think about what I just said. So that's going to be a hedge, right? We're hedging a put. We know that the number is going to go lower, right? That's a high probability, 85%, right? And I'm telling we did a class on this. Now, this is the scenario, and these are the three scenarios of this candle. Well, I'm gonna draw all four of them, right? I'm about to draw all four scenarios. We can also have something like something small, right? Like tip of like that's 380 and just like a morning star for those that just saw a morning star, right? And it's gonna be like a T, bam, a little gap space T, right? But for this to have a morning star, what has to happen? For this to have a morning star, what has to happen? Bro J Cooch, Bro Don Cheeto, could you care to answer? For this to have a morning star, what right? Or evening star, whatever you want to call it. What has to happen? This is very important, guys. Right now, we're going to cross-examine the what if scenario. This at 393, 394, right? Gap down, right? So we can scratch this out, right? Any gap down right now, we can probably pretty much lightly scratch it out. So let's X this out. I'm gonna just X right there, and we X right there, right? So that leaves like two scenarios we know now that couldn't arrive, right? Make sense? Highly probable. Let's call those scenarios what? A 2% probability of coming out. It's cool, bro. We just started, bro. It's nothing. Okay. So I'm gonna say that we have 2% probability of bullish engulfing. It's not impossible. It can happen. Why? Because the EMA structured, right, is still within a certain kind of bullish confinement. I mean, you got to call it like it is, guys. I mean, this is still kind of consolidating bullish. It's a matter of how it's going to consolidate. Can we do when we trade low floaters, guys, or pennies or whatever? It'll pop up, go down, test the, and then go back up somewhere, go down, go back up, go back. And right now, this is the area that I'm watching Doji, right? So, Bro Don Cheeto just answered. Most likely, we won't have a gap down. I mean, it's already up 0.31, right? Now, it's going to be a relief move, and then another bank takes down during the week. Just watch this. You guys remember FTX? Who remember FTX came out say, look, I effed up, and after that, there were his what? These guys are all friends with one another, right? They're all friends. So then the next guy said, look, I effed up two guys, right? So what's happening for those that are not familiarized with what's happening with the concept is this. This is not even considering the default, right? Banks have make money from what from deposits, right? People deposit, right? They loan it out. And we know that Citigroup was writing bad loans, right? And we're gonna take a look at Citigroup, right? I hadn't thought about that. Remember in October, Rodon Cheadle, when they were writing bad loans? Now the bank saga is not done. I'm expecting two more people to come out, two more banks to say, "Hey, look, I dropped the ball." Maybe towards the end of the week.
Mm.
That's what I'm thinking. And then we'll see what Powell does. Knowing that too now, if it's a bearish week, like a very bearish week going into Powell, I'm more likely thinking Powell will rocket the market. Why? This right here, right? You can kind of tell, like, and Powell come like give his little thing after the FOMC. Now, this is probably gonna reach like around this threshold. Now it all depends on what they're really trying to accomplish too. And we're gonna go back in history to see, and then Rodanchi to like correct me if I'm wrong too. Now I was kind of like up at night, and I was wondering what happened in 2000. I want to understand what happened in 2018, right, and how to prepare for it. And what I find that the VIX went to 80 something before the market even recovers, which is even better, right?
Yeah.
If hypothetically, knock on wood, if we get a VIX 50, I told you guys what we have a 20,000% play. Now, fortunate, hopefully that won't be the bottom of things, but based on history, is like 3 months later, the bull market starts 3 months later. So we'll have, so uh this is recent, bro. Oh, this is okay. So this hasn't been fully disclosed yet. We're gonna look at some banks too. Goldman Sachs has to be one of the top day trading plays this week, especially Monday. You know, um, especially Monday. Is it going to make a bullish engulfing? Is it going to do 1/3 of the drop? And we're going to discuss more about it. And now the next one is this. I'm drawing all the possibilities for you guys, right? And I told you guys earlier in the class, remember, I know that forgive all this, right? The next candle, a gap down and a drop all the way here. Another size, same size bullish candle matching right here, that little around this area. Now this is the weekly view, right? So the only things I see right now is either this candle or this candle right now. Now we can have a red doji, and I'm just excluding the green doji. So we know that this is not a possibility, right? Powell did this. There's no way, and you can kind of tell that he did a small one. This is not usually he does more damage than this. This one is a T. Now people's gonna be like a little bit uncertain going into. But one key thing I found is what, guys? Let's think about this. All right, what's driving the market fear? Good job report numbers, right? Think about it.
Yeah.
Is the bar set too low? Is the bar
Yeah.
set low? You know how low the bar is? What is our population? 35 million, right? What is 1% of 35 million? Think about it. Look at the bar. Job growth at 1%. The economy is strong just because it grew 1%. And I think that's the net. Now we know that the service sector is higher, right? Restaurants, right? 350K. Thanks, bro. That's not hard, bro. That's not a hard number. You talking about like what job report number? 350 people, 350K Uber drivers, right? McDonald workers, Dollar Tree retails, all you know what I mean? So that's not hard, right? I mean, let's think about this. Then you have the layoff. You have the layoffs actually coming in. Now, one key thing is the dynamics of things. Now, I saw that the 66 was that consumer confidence. I highlighted in my leg notes channel what reports I'm watching this week, right? So I want you guys to pay attention. The consumer confidence is relatively high. It's at 66. I don't know if that's an actual real number, but it shouldn't be 66 after this bank problem. Right? What is the
Buenos días, ¿cómo
what
estás?
is make
Hola,
sure that
hola,
we're here, guys.
pásale,
Make sure that
pásale.
we are muting. All right.
Hola, ¿cómo
So
estás?
one
Bien, sí. Súper, súper. Entonces, mira,
okay. So one key thing is this, guys. Those that have been with me a while, right? The bank stuff is not done. The bank stuff is going to create fear in the bank stuff is going to create it's a Guys, wait. Okay, guys, this is a thing. Especially for the old people and especially for the new people, right? That's fairly new. Some of you guys been with me for years. And you guys know I can't take everybody from TradeWorks. Now, knock on wood, Bro J Cooch is about to join us permanently over here. Now, one key thing is this: you guys come up with the craziest propositions to me, guys. All right. Don't ask. Look, I don't know you, especially for the new people, right? And don't ask me or come up with a proposition for me. Make sense? Just FYI. And they got this one person group member ringing up my phone, asking me, stuff, and I was like, I didn't give you an answer already. So what makes you think that, what do you think you have to offer me? Make sense? Think about it. So he's asking me to trade his crypto account. I'm like, dude, I don't have no knowledge of crypto. I already told you. Make sense? And I don't even know you. So kind of keep that in mind, guys. If that, I will ban you from the Discord. I don't have time for that kind of stuff. Right? Okay. So now everybody, we all agreed, right? This can't come out right now this week, bro. I get like the weird, you know. The thing is this, bro, Amar. If you guys can help me with the new people, you guys been with me like for years. You know how it feels to be new, right? You know how it feels to be new. So they're, given the time, remember they're struggling as well. They're like, okay, how, how are they, and sometimes they're in the process of understanding how I make calls. So how is he making calls, right? So we'll create a help channel, right? We'll create a help channel. Make sure that guys, it doesn't matter. They ask you about charts. They ask you about fundamentals. They ask any of you guys could guide them. Make sense? Most of you guys been with me long enough to be able to trade on your own already. Think about it, right? So, all right. So the only thing you guys missing is the forecast. So let's talk about, okay, now this is we derived the scenarios, right? I'm gonna whack this out, right? I'll target right now. Let's move our cursor right here, the possibility, right? Right here. That's why I have this about 375. 375 is a possibility, right? I haven't marked this right here, but right, let's say that right here about 375. So I can't also put like a 375. I don't want to confuse you guys. So let me just do this. Let's put 375 right there. Oh, yeah, that's a possibility. We know that's going lower than here. The question is how low. This is the next low area, and after that, you really could short this all the way here. Now, if we get to 394 Monday or Tuesday, let's say Tuesday, it rejects right there at 394, and you start to see it close at 393. Get ready to buy puts, right? We should be already in puts. We know that it's going lower. You're going to add more puts, average down your current put position. Anybody have any questions? And you can probably, let's take next week. You can probably like 376 next week, 376, 380 or something like that. Some cheap ones if you wanted to. Let's swing a little bit longer. Anybody have any questions? 394, and we might swing puts all the way to here or here. I'm gonna say, hey, look, let's just take 383 puts. Right? Anybody have any questions with that? Now, how did I derive this? Okay, let me clear this out. All right, how did I derive this? So first thing is you got to look at the inverses, right? We know that. Let's look at this. What do you see? What do you see with the inverses? We saw this, right? Is this greater than, is the 7 greater than the 14? Yes, right? That's one check mark, right? That's the first thing. Okay, is this right here greater than the right? Yes, right. So we know that it's going to go higher, lower, right? Think about this. So don't Monday and Tuesday, whatever calls you in, be prepared to lock whatever. The week right is for the bearish side. Now the next area for this one right here is what? those that familiarize with patterns, right? And we're gonna have a pattern class like for the new people, right? Bam, bam, right? And at some point, bam, bam, and then it's gonna go like right, at least right here to the top of here. Show you. So this is the minimum right here. The min drop. Right there. About, and we're gonna mark this number, see about 24, about 24.70, about. So this is possibility that this could be a crazy drop right here, about 24.70, 24.72. You might want to, whoever copying, you might want to write this down to 24.72. I'm looking for any pullback. Now, this candle, just so FYI, it pulls back right here first before it legs up. This is the common. It pulls back right here, a third of the way. Remember, I'll teach you guys about a third and a half, a third of the way. Then it legs up. How do we get this candle? Anybody take a wild guess? If we get this candle next week, it's almost the same. Early week strength, end of the week weakness, most likely. The only way it'll stop is early week strength. Early week weakness, and then end of week strength, like a pop up and a fade. Now, this is the backward of the SPY, right? Monday and Tuesday is going to create this line within this body. The push, right, is going to create and matches over here. Does it make sense? Anybody have any questions? Think about what I just said. What does this line right here coincide with? Right there. Backwards. Right there is SPX. Right there, backwards. Early strength, end of the week weakness. Right. Well, I have right now, based on my intraday sheet, I'm having CPI as a possible green day. PPI will tank. That's what I have right now. PPI can tank a flat, remember, but between Wednesday to Friday is going to be like another kind of sell-off. It's going to kind of milk the bulls in, thinking like, oh yeah, everything's fine. As long as you guys remember this number, these numbers that I posted on a weekly basis right here, and look, let me and I listed it out for you. This is a possible low, right? If 381, but 376 is in play. 376 right here, sort of 380 was in play. Right now, CPI gets to here and it wicks. This is the wick what I'm talking about. 394 to 393. You might as well start your put position. Now, if you're already in the put position, don't worry about it. Because why? We know that it's going to go lower than 385. Make sense? That's a give me. Right? We're in 380 puts, right? Those are swinging. So we know that it's going to shake some of the bears out. Just shake them out. Like, it's going to be something like this. Maybe Monday, something like this. Monday, Tuesday, and then fade. But it's going to be like, if I had to guess, let me draw it out for you guys, right? And I could be wrong, right? So just, this is, right? Monday, Tuesday, right? Wednesday, Thursday, something like that. If I have any questions, that's the best way I can draw it out for you guys. Monday, Tuesday, bam. Wednesday, Thursday, Friday. The other scenario, okay, the other scenario is Monday, Tuesday, Wednesday, Friday. Huh. We already established it. There's only two ways. I don't think we'll hit a low. I think that we need a relief play. There's a relief movement, and then towards the end of the week, more banks going into the FOMC. More banks is going to be like, oh, look, I lost money. I lost money. Banks coming out and say, I lose money. Ain't that crazy? Right? How do you lose money as a bank? Right? Ain't that crazy? Think about it. Your job is to hold people's money, right? And pay their bills when they need to, right? Fund transfer. Okay. Gold is the safest sector. We're going to talk a little bit about gold. We'll take a look about gold weekly. Gold is, I know you guys can't see this. Maybe look at it on your own time. So I'm going to speed this up so that I can start on the next thing. Same thing with S thing. This is a green candle, right? Look at the crossover. This crossover one time already, right? This crossover. Look at the 7-8 right here. Let's look at all of them. Let's take a view about all of them, right? Mark this, and then we're going to look at all of this. I want you guys to see this. Okay, let's go down the list. It has both cross. This one, SPX, answer is yes, right? Has both cross. The seven always cross first. Remember, this one's almost. Once you start seeing the weekly 5 EMA cross the 8, we better be in puts with this ticker. Are we all cleared? This the one, this the right. I'm gonna show you guys why. Remember this one. Let's do this. I'm gonna mark this with an X. This is not ready. So let's mark this almost, right? That line. Is this ready? Not remotely close, right? So this has a lot of catching up to do. So let's X this out. Let's X and this is not no right, not but it would have bad bleeding. It could set up like a right. Is this ready? Now this one needs to pull back a little bit too. Right now this is on the daily. Hold up. Let me switch to the weekly size. Oh no, this is the weekly. Okay. Okay. The weekly, right. Is this past 2110? Everybody agree. 2110, 2027, and the 7 right here at the bottom, right for the VIX. 7 is what 62 and 52. So this isn't compliant, right? We know that the VIX will go higher than this, stronger chance. Does it make sense? Now we're going to talk about the strategy play later on, and I want you guys to be kind of prepared and stuff. I don't know. I'll try to narrow it down. I'm thinking that it's within the next 2 weeks. Could it hit here and fade? I might even start one right here because this seems like because why? We catch it like right here, and then we sell the next day. That's even like 400-500%. It just looks too easy not to even attempt it right here. From here to here, look at this 1 day hold. So let's say that we get a squeeze right here, and then we sold the next day, hypothetically for 10 points. This is about 5 to 10,000%, just a 1 day hold. I'm pretty sure everybody would want a 10,000% play in 1 day hold, right? Think about it. Who wouldn't want a 10,000% move that you know, hey, look, I'm gonna take the risk, right? For a 1 day hold. It's very important, right? So this is going to be a key thing that we're going to trade a lot throughout the course of this upcoming, like, now I call VIX calls, right? It's squeeze here. I should have said, hey, look, time to take VIX puts towards the end of the day. Market still sold off a little bit and they kind of fade back. Now let's look at this one right here. Is this in compliant? Housing. This is housing, guys. Remember, right? It crossover. It crossover right here. How about the 5 and the 8? Is in compliant? Yes, right? So we know Yang, right? And Yang, I lost a good bit of money in China. I'm okay. When we're wrong, guys, this is the thing. It's okay to lose, but understand that it's not okay to lose horribly. Kind of think about it. You control that. I was hoping for like some kind of relief bounce, and it just kind of keep collapsing. Stay away from China this week, right? Gold. This is the bearish of gold. Now, bearish of gold is still bullish a little bit. I think that this is going to change like by the end of the week. So that's not S Dow. Let's take a look at S Dow. S Dow DIA, right? Banks did this and industrial did this. It's about to test this one right here, and I put the mark that I want to watch this area. But if I can tell you this from experience, this right here will probably we might be bottoming soon around this area at best with the DIA from right there. Never have any questions. I mean that might be where the wick area. It might even take 2 weeks to get here. All right, but so far, if we look at this, let me show you. How do I draw this out? Right, it's a bullish candle. You always expect a pullback, right? Right, it goes down right here. Can't make that up. Goes down first. And we established that we don't believe that there's a bullish engulfing this week, right? So go down first and then wick up, right? Matching here and here. Matching, testing these two. I don't think it'll go all the way here. I mean, it has to be something. It has to be a crash. Now, one key thing is this. I want to prepare you guys for when do we know that we're on a near-term crash? when the whole indices right here, the whole indices, this one accumulated about almost 10 points, 10% the whole week. So for it to be a possible crash, this has to be about 33 to 34. Same thing, this has to be 45. Like they have to drop at least 10%. Now at that 10% might be the bottom with a max fear, right? Max fear, and then we'll check the fear index and stuff like that. Okay. Now, what else? VIX. Let's look at VIX. This is another opportunity for us to kind of short to as well. This is a reverse split. It's kind of hard to read right now. Right now, I'm just kind of gauging like a third of this candle. Remember how I teach you guys, right? It's a halfway mark over 95, right? Halfway, you got to be bullish with a stop loss right here, right? It breaks 97, you really got to be bullish all the way to the top of this candle. Makes sense? I don't think it's going that far. I would mark like that, the 65 mark for a possible fade. Now this one pays well, pays very well right here. Let me show you the options. Well, let's say that, let's look at the calls. We're going to talk about options like strategies later. You see this? This pays very well right here, right? Now when it drops, it's the same. So this is going to be one of our crash tickers as well. Now, when the time comes, this is going to drop 20-30% in a week. Just FYI, keep that in mind. It moved like 11% right now. When it drops, it's going to be, the melt up is going to be a lot quicker in a couple of days. All right. Anybody have any questions? That's pretty much all I have. Now, CMIs. CMIs, I'm going to be kind of close by. Let's take a look at the FANG inverses first, and then we're going to start on something else. Right. We're going to talk about the crash. Does this look bullish for NVIDIA next week? Well, not really. That's why I said if you're going to hedge something, right? Look at this. Right. So NVIDIA, the next 2 weeks, NVIDIA could be bearish all the way up to right here. That little mark, about 23.57. So 23.57, $2 is already 10%, right? $1.50 is about what? $2, 10%. Another dollar is about 15%. NVIDIA has a chance to drop 15%. Right. So let's take a look at NVIDIA. We're talking about in 2 weeks, right? Remember, they have that stuff. So 15% from here is what? 10% is $20. Well, 230, 20, 10% is $23. NVIDIA can drop at least $23. We go all the way right here. Like right there. So this is my 2-week target for NVIDIA right now. 2-week target for NVIDIA. $198. Right. 190. I'm just keep it as the whole number. Anybody have any questions? That's if now remember when the market cycle, the only thing is like that's only now it would accelerate faster if the market is dropping. So but right now I'm just gonna put that in play. All right, now let's look at the Amazon. Amazon now is Amazon's testing halfway mark, right? Amazon breaks here, right here. You got to be bearish to Amazon all the way here. It's just understood. So let's draw the halfway line, right? It tested right here. Look, it passed 1, 2, 3. 1, 2, 3. So rejected multiple times. It breaks 31.75. 31.75. Amazon can drop. Well, how much more? More, right? We want to play it safe, right? We want to play this safe. So when we take an Amazon, you make sure you might want to hedge with some SPY calls. So that's Amazon, and it goes to like 33. So Amazon can drop another about 4%, 4 or 5% or something like that from here, in the halfway mark. This one. All right, so this one, Microsoft. Microsoft will not have a lot of drop juice in it. So we're not going to trade Microsoft this week. The best Microsoft can do is like this. Another one like that. It pulls back a little. It gaps up to this red area right here. That's the best. All right. Anybody have any questions? And that's why I put this little wick area. This is strong. If it breaks here, then it can go to 25. It's still not worth it. Maybe day trading. All right. This one is very interesting, right? This one's Google. Now, Google still wouldn't be a preferred for me a day trade for maybe 20%. 25%. But besides that, I won't swing right now. Not really swingable. I might swing Google when we get to like right here. And this is where I'll probably take Google calls, right? A triple test of this area. And you can kind of tell right here, look, right? 5 crosses the 8, right? 7 hasn't crossed the 14 yet, right? So the confirmation is not there. Let's look at Apple. Apple, same thing. This is bullish. Remember what I taught you guys, right? With the candle pattern. You see this and this. Next one is up. Next one is green, most cases, right? So we know that, and this is why somebody noticed it. Somebody's buying it already, right? This combination plus this is up, right? This plus this up. This plus this up, right? Most cases. Let's look at Tesla. Now Tesla right now, Tesla could do another ugly drop all the way to 52. This is one of the reasons why I think Annie's holding this, and that's why I say, hey, look, hold it. And plus, she has Tesla puts that's trying to recover with a hedge on ITSE, right? And ITSE's down. We're going to talk about a little about ITSE by Tuesday. We have to get out of Monday or Tuesday. We have to get out of ITSE for those holding with me, right? All right. Anybody have any questions? That's pretty much for the weekly analysis. Safest areas. Remember, we're going to look for what? What are we looking for, bro, Amar? What are we looking for? What are we looking for this week? Bro, last person I want to ask is Bro J. Cooch and Don Cheeto. What are we looking for this week, guys? Monday, Tuesday, Wednesday, Thursday, Friday. What are we looking for? Most likely we won't have a gap down hammer, bro. I think, it's okay. We kind of established that the market needs a relief play, right? Monday and Tuesday might be green. The rest of the week might be red. Just FYI, we're looking for a pump between 390, 394, and we might take puts. Might take 382 to 360. So yeah, correct. See what Borelia said. Small relief and then down again, faded. Remember, that's all 5 days. Now, I might have to break it down with the intraday sheet, and I'll break it down day over day for you guys. Saying, hey, look, this could be the peak of the day. This could be the low of the day. Just kind of keep, when you see those daily analysis, guys, I'm incorporating it from the weekly. I don't think you guys realize how I'm constructing things. You guys see this. This is what all you guys focus on, right? But this is not it. Does it make sense? So this is not it. So kind of keep that in mind, right? Okay. Now the next thing is, since the crash is coming, we're going to talk about like the crash strategies, right? Oh wait, let's talk about history first. Before we talk about history, let's talk about 2008 and 2008 crash. All right. Don't worry about taking a picture of this, guys. I'm going to give it to you guys later anyway, or it should be already posted. Okay. Now, let's go back to all the way to 2008. And I'm going to narrow this down to like the weekly so that you guys can see what happened. I have to do it daily. See, this way. Let's do this. All right. So we're about to go back to 2008, right? We're going to look at VIX. When did VIX spike? When did the market really bottom in 2008? When did Bear Stearns crash, right? So Bear Stearns started, everybody said that their problem started when they would start reporting negative income or missed profit and stuff like that. That's the start of trouble, right? Missed profits. But that doesn't, I guess, like, some companies, at that point they just falsify data, right? They were like, okay, look, we just gonna, you guys start pencil whipping the investors calls, trying, the insiders are privy with that knowledge, they try to exit their position. And then we're going to talk about a play that we might take a fun play. They have Q3 data, something that you're willing to lose, like maybe I'm just taking one for fun, guys, nothing crazy. But if it hits, it'll be like a SIVB. It is, but I think that the market will recover. If we get a crash early, I'm thinking like May, if we get a crash this month, then May and June starts the recovery month, starts where the bottom of the bull market is. Yeah, and that's what I'm leaning to right now. Now, if we don't have it, and it's delayed, like kind of like 2008, September, October. Crash months, guys. I taught you guys this. What are the crash months? What are the crash months?
Yep, that one. The other.
What are the crash months? The most common crash months, guys. You've been in like dozens of class. Like some of you guys been in hundreds of my class. What are crash months? March. Thank you. And what's the other area? Nobody knows it. September, October, and November, right? September and October. Rodon Shields, right? There's only two areas, guys. This is very important, guys, right? The problem is, and we're going to talk about how I came up with the process from Bill Aikman. Bill Aikman, remember, he showed it the market when it went down, and he kind of probably would ride it up with the bull market. Now, this guy turned 26 million into 2.6 billion, right? So it's very important, the execution and the timing of things, guys, is very important, right? So, and we're going to see this about every 4 to 7 years, just FYI. So you want to perfect this. This is very important, right? And the rest is a bull market, right? Bull markets are easy to trade. What do you trade? Like SPY calls month over month and just kind of ride it? Does it make sense? I had one guy that used to follow me. He said, bro, in a bull market, all I did was take SPY calls 2 weeks out and just keep rolling. That's what he did. Now I don't know what is his strategy, or he probably didn't size up. He just probably been consistent with it. All right, so we're gonna go back to 2008. The 2008 crash. I know I'm going to the daily candle. Then we're gonna talk about strategies. I don't think we're going to 80. I think that at best maybe 50. At best, maybe 40. Maybe we get there. I'm not sure. This week, we had now one key thing. Anybody with the SVB shorted. Anybody lost money in SVB will be a short day trade. So Roku would be a day trade, possibly a swing short for us Monday. Okay. Go back. Obama years. I don't know why. I have a feeling Biden's going to get elected the second term. I don't know why. And the funny thing about it, some of us are like the same age, right? When I think about Biden, you know what Republican president he reminds me of? 1994. Okay, so we should be around this era right here. George Bush, right? Kind of remind me about George Bush a little bit. I don't know why. You know what was the most hilarious thing with George Bush? Anybody remember? All right here, 2008. So, I know you guys can't see this. Let me see if I can do this better. I gotta figure out. Anybody? 1 second. All right, let me do this. See if this works. All right. So the same like Bear Stearns over here. Over here is like the crash of Bear Stearns. Let me see if I can narrow this. Bear Stearns crash right here, or kind of like starting right here. Bear Stearns, like about right here. Bear Stearns, like right here. You guys see that candle? Okay. So the Bush I think did 1 term, and the Sun did 2 terms. If I'm not mistaken, I'm not sure. I'm not good with history, bro. But I actually like the deadbolt more than the sun, bro. I don't know why. All right, so um, right here is Friday. This is like what happened when Bear Stearns sort of kind of announced it. This is the Monday gap down, and you see Monday and Tuesday was great, right? And the market. Let me see if I can. Is there a way to? I don't know how to do this. All right. So the market actually did another bull pump, guys. This is what I want you guys to understand. From here, it did another bull pump all the way to June before it started messing up again, right downhill, right here, right. Now the crash came in right here, October, right? October was sort of like the crash. Someone said 24th or something. Let me see. October was the actual crash. Someone said October, right? Am I October 24th? The significant of October 24th, right? Now this one was the peak of VIX right here, October 24th. Right here was the peak of VIX, right? Right here was when Bernanke uh Bernanke was with the president trying to get like a stimulus plan, blah blah blah, and this is where the bottom was. So you can kind of tell the time frame. I want you guys to understand the time frame. This is when they stepped in, right? The Fed say, "Hey, look, I'm lowering the interest rate." So he's one key thing that a lot of people don't realize. What is the fear about Bro J Kush right now going into the FOMC? Let's think about this. Watch what I'm about to ask Bro J Kush. I'm testing his knowledge. What's the fear right now going into the FOMC? And I'm picking on my bro too. Like we're really close. All right, what's the fear with it, bro? The FOMC. What is the fear going into the FOMC? No. Bro Don Cheeto, I want you to help Jay Cooch out. What's the fear going into the FOMC? I think I must have asked the wrong person. Higher interest rate. Think about J. Okay. So 50% we can expect a more downside, right? 0.5 basis point, right? Let's think about this. 0.25, would you say that the market would 0.25 when you said the market would beast up and green hammer candle bottom, right? 3%, right? What if he cut negative 0.25% because of what happened with the banks? Think about it, right? I'm testing you guys. Think about like the what if scenarios. You guys are not thinking. You okay? Let's think about this. If two more banks fail by the FOMC, right? It's a crack in now. Keep in mind, these guys made their wealth from nowhere, right? These are maybe tech guys, financial guys. These are not long term like James Diamond. James Diamond is going to end up eating all of them up. You know, right? He's gonna say, "Yeah, I'm buying them. I'm buying them for cheap," right? Who wouldn't, right? So the three banks that are likely going to be safe is J.P. Morgan. I think JP was top dog, and then probably Bank of America, and followed by Wells Fargo, right? Now, anybody have any questions? So remember, this is the thing, and I'm gonna show you guys VIX, and this is a good thing to me. When I saw this, this is a big relief for me, right? Because I was thinking like, man, if we traded VIX, if we end up holding VIX longer than we should, how can we capitalize on the bull run? But the bull run doesn't come out until 3 months later, right? So just kind of keep that in mind that what has to come in play is what? Fed, lower interest rate, Powell gets Biden, right? You guys gonna hopefully you guys remember this. He might do this, I don't know when, maybe in his last year, to give tax breaks or stimulus to pump the market, right? Plus bailout money. Somebody's gonna get bailout money, right? Anybody have any questions? I'm gonna leave that right here, right? And this process could take 3 months from the trout process. A duration. Let's put duration. Duration will be anywhere between let's do a 3 to 4 months, right? From Trout. Any questions? This is okay. Let me ask you something, guys. Who has a 401k? Mobility, you had a 401k? I'm picking on mobility. Watch what he says. Hopefully he said yes. No, unfortunately, that's cool. You know how to trade, so no worries, bro. Okay. You can blame me. I can do that myself. Like, bro, why would I need a 401k, man? I can trade that myself. Okay. Cool deal. You remember in November, I said to switch your 401k to bull mode. You guys remember last November, right, bro, Billy? Last November in the group, I said that you guys want to switch, right? Right? What did I told you guys in March? Go defense, switch it back. Remember? Think about it. February and March, I said get ready to flip it back. Think about how much money you saved just that move alone. Does it make sense? People are taking a beating in the 401k and you're rinsing and repeating the 401k by moving it to like what? Cash and securities, cash and equivalents, and then back. So I told someone that if we get a crash, switch your 401k to bull mode. Now, given the situation right now, I think that right now it's more likely going to be a financial crack, guys. To be honest, this is going to get ugly. Just FYI, right? Just FYI, it's going to get ugly, real ugly if it hasn't, right? Cracks in crypto, cracks in stuff like that. Now let's look at the VIX. Some of the now the next class is what we're going to be trading, right? The first thing is the VIX. Let's look at historically. If we get 80, right? Remember this is COVID. Now COVID coincide with the bottom in this one, right? Let me narrow this down. And it only reached 80 twice. Right here, it only reached 80 or beyond twice. This one reached. This is the financial crisis right here. The financial crisis. This is a month, right? This is a monthly, right? If we can get 80, it's almost equivalent to turning 1,000 to 1.5 to 2 mil. If we can get 80 in this, and we can time it and execute it, 1,000, right? And run this one, you won't be at the bottom of a bull market. So don't assume that right now this is not the same situation as COVID, right? What happened with COVID? They shut down the economy, right? Powell steps in. About 2 weeks later, saying that, hey, look, I'm low on interest rates, so I'm doing this. We're pumping money in. Think about this. Think about this. This is the same game. Make sense? When he's saying that, bam, I'm pumping money in, the government, Biden, right? Lower interest rate. It's time to go long, guys. We're talking about even doing nothing and sitting on what spy calls, like right, and making you could just sit your whole thing on spy calls when they said that. Think about that. And make what? Just 2,000% a year, just sitting your right. You be feeding it. All right. And what did Spy did? Spy did what? 230? 230 to give me 1 second, guys. I have to take this call right quick. Okay. All right, guys. So one key thing is this. If we get this right here, right? Now, I'm thinking like it won't be as bad. And if it gets there, I think at best is this range right here. So we're gonna have to watch. VIX puts and VIX calls is gonna be what we're gonna be trading pretty frequently, just FYI. This thing can kind of go up and down real fast. Just from here, See, here is not bad. Now remember when it start fading real fast. Now, one key thing is if we ever get to here, it'll be sick. Right here, 50. 50, I think that 50 is even a possibility right here. You can see it reaches a couple times. Right. Now this one right here, I doubt it is gonna go that high right here. This is the mortgage crisis, and this is right here. All right. Anybody have any questions? And then we're gonna do VXX. I might even do VXX. VXX might be VXX. Now, there's a lot. The only thing with VXX, there's not a lot of activity in this one. We're gonna have to be real cautious with this one. Okay. And then also, I am closely looking at this one right here. Remember, you guys remember when I went to Alaska? Remember when I went to Alaska and we traded this? Everybody remember, right? When I went to Alaska, we took puts in here and puts in where? Where did we took puts in? That's fine, bro. Everybody's different. You know, there's always an alternative. Remember, when I went to Alaska, you guys remember? We took here. I said 82 take puts. Remember? Think about it. 82 take puts. And if you held it, but we took like a month out. I didn't hold it all the way, but I wish I held it all the way. $40 drop is no joke right here in a month. Okay. Anybody have any questions? Now we're going to talk about hedging a little bit, right? The next topic is hedging. Hedging. I'm gonna use this space right here for hedging, and we're going to explain how hedging works. So I'm gonna pick Bro Amar for this exercise. All right, Bro Amar, I'm gonna pick you for this exercise. All right. Given what you know, your account is right. Okay, and I gotta pick on like you're the only Indian. I'm just joking on board, so I gotta pick on you first. All right. Given what you know right now, bro. Let's say that your account is 10K. You have a 10K account, right? We know. Let's know the facts, right? Know that by early week strength, right? Early week strength and end of the week weakness, right? This is what we're leaning. How would you hedge going into the week, right? And tell me how would you hedge going into the week? So right now you're starting Monday. How would you trade this 10K? And we are gonna observe how Bro Ball is doing it. Everybody's different, guys. All right, but I just want you guys to see what he says. I don't even know what he's gonna say, right? How would you hedge? Think about it, right? Before you hedge, what do you need, Bro John? Help Bro Amal out. Calls on at the dip on Monday, 2K inputs near the top of your planner. 50% cash till the puts start to work and then add in. Everybody agree with him or disagree? This is important, guys. When you guys wonder what I'm doing, that there are some trades that I'm just protecting my, make sense? Very important. How do we hedge? So one person, you agree with that one, right? Another thumbs up. Okay, anybody disagree? Anybody think that they could come up with a better strategy? And he's partially he is a good strategy to the weight. We know that it's going to go lower, right? That's a give me. I don't know how low. I just know it's going to go under 385. So you know that if you take puts anywhere within the week, right, that covers the whole week under 385, one average down, you can't lose that. Think about it. One average down, right, under 385 puts is hard to lose, right? We establish that. That's the no, right? So we know that. Let's put the no that 385 lower has an 85% chance of going lower, 85% chance, right? So first thing is, right, It would not end the trade, right? Let's talk about Monday. How will we trade this? Let's assume that this is still the same 10K. Yeah. All right, and then Bro JQ said Tuesday he might get inputs, right? And we'll play it by ear, right? Based on the targets. First thing is this day trade, no swinging calls, right? Day trade calls, right? Ignore, right? Let's say your day trade calls, or maybe I wouldn't swing anything in the CPI data, but just say day trade calls, right? Monday and possibly part of Tuesday. I don't know when it's going to start fading, right? Part of Tuesday. Maybe day trade calls, right? Let's think about this. So Monday, Tuesday, right? Now, depending on the pop, right? So let's say that you have 10K. Okay, you know what? First thing I want to do is what? I know that it's going to go under 385, right? Right. So let's start I'll put position on Tuesday. I'm probably going to put like maybe 2.5K, but not cover this whole week with the following week, right? The following week expiry, right? Let me delete this, all right? 2.5K, you got 7, right? Or you can also, depending now remember you're on the put side, as you got one that's next week, right? Now you want to take advantage of some ODTs, right? Maybe also add Nvidia, possible Nvidia, Tesla, right? Those are the seem like the one supposed to be down. Maybe Tesla, Tesla might be calls. Tesla should be like, let's say Tesla calls, right? You can hedge this with Tesla calls. Why we know Tesla sort of kind of need a bounce right now. Tesla's kind of some kind of bounce, short term, long term, right? Long term position with a short term hedge. This is long for us, right? Buy and fall out. This is short term, meaning that I'm trying to hit both sides, right? So short term, let's just say that Tesla start going up. Now remember the hedge is supposed to kind of cancel out. So let's say that this hedge would be about 750, about 750. Right? Remember your balance is 10, right? And then you kind of gradually, depending on the ratio. Anybody have any questions? Now remember the Tesla hedge at best you can only average down once and then put a stop loss once a stop loss. No, you guys see what bro Billy is saying. You guys see what he's saying. The answer is no. You solidify the one that you like the most with size. Makes sense. So going into the weekend, I don't mind sharing this, right? What do I have? Etsy calls, and you could have now besides Etsy, right? You guys could have day trade this. Didn't you guys could have day trade this yesterday? Am I not right? Am I correct? You guys could have day trade this yesterday, right? BAC and MS calls. Anybody didn't take profit. Now, don't do what I do if you can't hedge. You do need don't do what I do if you can't hedge. That's the thing about it. Take the profit, right? BAC went up, right? And MS also went up. You could have put a stop loss above cost. Now, if you're recovering, if you're recovering, I don't recommend you hedging. If you're recovering, because you're scared. So the first thing is you need to take like to build confidence. Recovering, what do you need to do? You need to take 5 to 10 wins and hit 9 of them to build confidence. Think about it. You can't hedge. You got to win. You got to win. Like, okay, dude, now win small. Don't try to win big. Win 9 small wins. After that, you start being comfortable. You got a little cushion, right? You can say, okay, you know what? Now hold runners. Make sense? Okay, I take 5 contracts. 4 went to 50%. Let's say 5 contracts. They're at 50% gain. I'm gonna take profit on that 4, ride the one at the 30%. Stop loss, see if it goes to 100%. Make sense? I don't know if anybody's doing that now. Think about what I just said. Don't now if you're losing, you close out your whole position if you recovered. Now back over here, right? And I have J. Look, and I'm about to show you guys what happened. JP Morgan. All right, so let's put some numbers here, right? Let me do this. And then I have SPY 380 and VIX, right? That represent 15 to 20% hedging of those four up there, right? This is how I set up. And then cash, let's say cash about I told you guys to trade about 30%. Just kind of keep that in mind, right? Now let's put some numbers in here. And let's say Etsy right now, I'm down 50%. We're gonna take a look at Etsy. Let's just say that I don't know that it needs to bounce, so I'm not worried. Let's say that this one I haven't averaged down yet, and I'm roughly about negative 20% each. Right? I'm putting the numbers in here so you guys see. JP Morgan, I didn't alert the same time. Now we could have day traded. I'm still holding it. Now JP Morgan, right? Let's say that you're up 15% into close, right? We're putting a SPY put. SPY is, let's say that you're up 40%, right? And then VIX, you at break even. You at break even, right? Just hypothetically speaking, right? Okay, this is what I have. How would I trade this? Think about this, right? We know that what early week strength, end of the week weakness, right? So I know Monday and Tuesday is going to be green, right? So first thing is, can I take this 40% and cancel one of this out? Maybe so, right? 40 right here, take one of the 20 out. That's an option, right? That's a possible option, right? Cancel two trades out, 40%, or the VIX with three and one. You guys see what I did, right? Let's think about it. They don't have to be equivalent amount, guys, right? I can cancel one out and this, can I? Right? Let's think about this. Now, remember, we're on Tuesday. Now, let's say I know that Etsy needs to retrace back to the 50 EMA. I'm going to wait till like the confirmation is there, slap the average down, right? Get this to negative 25, sell green, right? And I'm done. I know that Monday and Tuesday is going to be green. So Etsy can bounce all the way to like $3, $4. I can do nothing and I'm okay. Let's say I do nothing and I can sell at negative 10%. I average down, I can make 20% or 25%. This one I haven't averaged down yet. The day that it start running, I average down, wait till it run 50 cents or $1, I can get out small green. JP Morgan is already in the green. Charts looks bullish, right? It's going to be higher green. Now, once this all, let's just say that this on Tuesday, I got all of this green, right? Hypothetically speaking, I used this to cancel this. I got all of this green and I made profit, right? Do I average down on the VIX? No, I can close out the VIX. I'll take the negative. Let's say that I'll take negative right here. I don't have to win them all, guys. Make sense? Let's say that this, then this is a small position, right? And let's just say I'm 30% down. Now, before you do it, you want to check the charts. Check charts and check the time. Make sense? Let's just say I'm right here. Now, this one, let's say that I work this one. This is my biggest position right now. Let's say that let's say hypothetically, guys, right? I'm down 10,000 right here on Etsy, right? I'm down 10,000, right? Etsy position 20,000, right? Now Etsy start running up, right? Let's take a snapshot of Etsy's chart. Those that been with me a while, right? We know that this is oversold. Let me clear this out. We completely know that this is oversold. All right, I'm gonna clear this out. Clear this out. And remember, I'm gonna leave that position over here. We're talking about hedging, right? I know that this thing needs to gap out. Look at the last time it did this. Last time it did this, right? Last time it did this. I know that at least it has to touch this green line at minimum, right? It can go 2 candles, 1, 2, into all the way this area right here. If I do nothing, I know that holding a day, I can get out negative, maybe even break even without averaging down. Everybody agree. Everybody agree that this is the possible bottom. Look at this. It fall, gap, that space, right? This is like a magnet, right? Look at this. And it pops up. See this? and it pops up right here. So I know that at least I'll get to this area. I can sell for reduced loss. No need to kind of, you know what I mean? Think about it. When you guys freak out, right? And I know I tease you guys about the guys and stuff like that. Be calm, take a break, right? Can the sell today is -50. You sell tomorrow maybe -10 or +10, doing nothing, right? If it gets to a green candle, right? This one right now at this point, I know that ITSE has to do this right here at minimum somewhere. Eventually, look at this. It has to kind of curl up. That little green line is supposed to curl up on that red line like this. Look at this. You see this? Look how long it took, right? Let's say you buy right here. You know that eventually it has to kind of retrace back. It's not going to go back all the way, but you guys get the point what I'm saying. Look at this, right? Gap away has to retrace back. All right. And that's the reason why. Now I'm okay with sacrificing this in the process, yeah, as long as my big position comes through, right? This now Monday, let's say that I average down on this. I tap the average down and day trade it out. This one's probably going to move from 15% to 85%. So let's say this 15 to 85, this one -50 to, let's say average down +20. Now this hedge right here is going to be the sacrifice play in this case. Make sense? Why? Why is that? Let me show you. Let's say that your NAV right now, let's say that the process that I just explained to you, the key thing in trading that a lot of people don't pay attention to, and this is very important. Who doesn't understand NAV? How well do you think you innovate? Let's say that this right side position right now is 30K. This whole position right here is 30K, right? The negative, well, whatever, right? And at Monday morning, let's say Monday morning it pops up. Let's say Monday morning. Bank of America right now, BAC went to, instead of -20%, it went to 15%. This went from 40% to 15%, right? Can I just take both of the 15%? Yes, right? One position, two position. Then I focus on this, and this, the last four. Make sense? See where I'm going with it? Now, let's just say that this is where you guys don't understand. This is the most important number right here. So let's say that after you made all of this move, and it doesn't even, you guys know what I'm talking about. That's been with me a while. By the time you did all of that move, right, and you waited for ITSE, right, and now your NAV is 37K with cutting two losses and offsetting. Does it make sense? We're so fixated on fixing all of them. No, don't be fixated. Stare at your NAV. NAV is what you have if you close everything out. Does it make sense? Think about it. Very important. Jay Cooch, understand this, guys. If you can't understand that you stand at your position and not your NAV, you will never succeed in trading. Does it make sense? Let me put the numbers in here. Let's say that those that have been with me a while, this is a 20K position right now, right? 20K position. Let's say this is 10K right here, right? These two sets. So this is hypothetically speaking 5K, right? Let's say right now this is 35. And so let's say that both of these positions right now, let's represent this by 10K. Right? You guys see I'm hypothetically putting the numbers in. I'm down 50% on a 20K position, right? This thing goes to break even. I still have that 20K, right? My NAV will go up by 10K. Everybody agree? Think about this. Let's just say this is your capital investment. You're at 10K right now, both from a combined average loss of, right? So you lost 2K right now. Now the market beats up, right? You already had your idea. I'm gonna take this and this over here, 15%, right? Make sense? You guys see where I'm going with it? It takes a while for you to practice. Smaller accounts is harder to do. Smaller account is a lot harder to do. I'm talking about you trying to hedge something with, I think bro DH was with me last time, and he was always trying to hedge with a 2,000. Bro, you can't learn to hedge with a $2,000 account. It's hard unless you know what you're really doing. And you still mess up. Keep that in mind because you have no average down either way. You can't take profit from here and average down here because your account is so small. We're talking about your account has to be a little bit sizable. You know what I mean? And you only hedge when you're suspecting what? Anybody? Uncertainty, dojis, and uncertainty. What did I tell you guys about the SPY? Every time that you see a doji, meaning that there's a near-term move right here, doji, near-term move, right? It, I think everybody thought that this was going to bounce and it faked off. Now the next hammer is going to be the real deal. Watch this. Let me show you. This is what this is what the only problem I have is this, and this is how the market traps you, right? This hammer, it worked, right? Most of the time, you know hammers, right? It worked. This one failed right here, failed. A lot of people got caught here. Don't feel bad. That's just part of the game. It's part of the game to take L's too, guys. Don't feel bad. I can see, and look, this is my specialty pattern. Remember, I told you guys 90% of the time, there's a 10% chance if you gap down. When it does this, what do? Anybody? Let's say that you are in calls right here on this candle. What do? You're in 6 calls and 1 put. 6 calls and 1 put. You're about to take a beating. It gaps down like this. You cut all your calls immediately at open. Make sense? It's very important, guys. You're on the wrong side already. Don't hold and hope anymore. Cut it immediately at open. Make sense? Don't hesitate. Protect what? The NAV. Right? Let me show you. How many times have you guys do this? Let's say that this is the NAV. Let me do this. How many times have you had do this? Right, let's do this. NAV, right? Put 30K. You in 6 calls for worth of 20K and 1 put for, let's just say 5K. I'm hypothetically saying you got 5K in cash, right? 1 put for 5K. So you got 5K left in cash to average down, whatever, right? It opens down like this. Remember, right? You know that it's a negative that is not going past this little wick area. You better cut like real fast, right? And take the right. And let's just say that because a lot of people, what they do is what? Oh, I'm gonna hold it to the end of the day to see what's going to go on. Don't. Make sense? You guys know what I'm talking about if that's you, because you cut it at open, you lost maybe 4,000. You wait till the end of the day, you might be at negative 15K. Big difference, guys. Makes sense. Now, on the bright side, your puts might be up to 6 to 8K, right? Does that matter? No, not really. You just, because why? You worry about maximizing this position and you just took a dump on over here. Make sense with everyone? Think about what I just said. When we always going to have positions that our only job is what? Is all how effectively we move money. That's it. All we're doing is moving money. If you can't understand that, that's like, look, this is like playing Monopoly. Make sense? Right? You land on somebody's boardwalk. What do? You start selling off. Make sense? Immediately. What's the least one I don't need? Bam, bam, bam. Okay, I need to protect this one. Make sense? All right. That's pretty much all I have for the class, guys. Anybody have any questions before we wrap it up? And then I'll put some charts that I'll be looking at over the weekend and stuff. Now tomorrow, I'm gonna be with Jay Cooch, and we're gonna probably spend a couple hours looking at setup and stuff like that. We're gonna say, okay, this looks good for day trade. Like for example, Goldman Sachs. Let's look at Goldman Sachs. I want you guys. Let's take a quick look, and then we're gonna talk about it. Look at Goldman Sachs. Goldman Sachs. I'm gonna day trade this. This is on my day trading list. Why? Because I know that at best this red candle. It could probably run up like this, right? This would be 100% run. It can run up halfway and reject. So I'm probably looking to day trade this and see if it's going to be a bullish around me. Now, 227 is already deep right here. 227 is already deep. So the next one should be ready. Goldman Sachs, even for a bounce play. Look at this. Look what happened. I want to show you guys. You see this? Right here. After you bounce, you got to fade Goldman Sachs again. So this is the last red candle. And look what happened. It took a while to bounce back up. So we're gonna probably day trading it for like $3 or something. TNA is gonna be a day trade for me. I like this too. This little gap down. I'll be looking for an entry right here. right? This, I'll be looking for an entry like maybe right here. It's maybe kind of wick up or something like that. And day trade it out like $1, $2. So this is the type of trades. It's Harmony and Etsy. Like any gap down should be have priority, right? Let's look at Wells Fargo. Is this day tradable? Yes. Where would I day trade this? Good question, right? Monday, right? Either you day trade it right here, you start calls right here, right? And then sell right here or higher up to the 5 EMA, right? Or if you got to be careful because you got to see every time it drops, it doesn't kind of recover that red area. So that has to be your target. Just be humble. Unless something, the only thing is this, unless they PR something and it does this, and it's not impossible. If it does this, it's going to do again next day. You see a full bullish candle, you hold for continuation. All right. Anybody have any questions? Or you hold runners. This is where you hold runners. Every time you see a full ball, you hold runners. Right? Full ball, you hold the runners right here. Right? Full ball, right? You hold the runners. Now this one failed, but it's okay. Right? You hold it for extra day runners, not a lot. Lock most profit 80%, hold 20% or 10% runners. All those runners, guys, add up, guys. We're talking about extra 30 to 50K by the end of the year. Just an extra runner. You hold it as if you hold it longer, it's even better. Hold it one extra day is already substantial. Okay. Anybody have any questions? All right, guys, that's pretty much all I have. If you have any questions, welcome to DM me. And then I'll see you guys around. All right, cool deal. Have a great rest of your weekend.